Okay, so the purpose of today's Zoom is really just to let you guys talk about whatever you want to talk about. You guys can ask anything you want. Please mute your mics if you haven't. I'll go ahead and do it real quick. But so looking, we'll just start by talking about Euro USD and why it's an awful idea to trade it right now. We've been stuck in a range for like a month. Um, I see people like sending trade ideas on it, which is fine. Like you can definitely still try to trade it, but I'm personally not. There's no point in trading this. But I must say, if price comes back down to here, you may as well just buy it again. And if it gets back up to here, you may as well just sell it again. That's what it's been doing. It's just been crazy, really, since this spike. FOMC right here. This was an FOMC spike. And since then, it's just been going wild, just nonstop ranging. A lot of the other dollar pairs actually aren't ranging too bad. Like GU isn't really ranging. AU is not ranging really at all. It's actually making nice structure to the upside. But yeah, stay away from EU. We'll talk about, we'll go do some top down analysis. Someone asked me about monthly and weekly cycles last time, I believe. I don't really trade them like particularly, but I do top down analysis like here on GU. I've talked about it before, actually. Just looking from a structural perspective, what we had was this downtrend, right? It's very obvious to see. So you had this low here, make this a little bit smaller. So we had this low here that we pushed below right here. Let me center that. So we had this low that we pushed through, right? Now that's our breaker structure to the downside. And then we had a pullback here, and what it traded into was this little doji candle. It did trade through it, but that's because there's something within this wick. This is just a run on some highs. I'm sure you could have refined it, but you guys can see right here, this was just a run on the highs that we had, or that were formed right here. So we ran these highs. Also, you can see we mitigated this up close candle here with that wick. So now just following structure and following what the markets are telling us, right? So this is just liquidity. That's what the dollar sign is for. So this was liquidity, and we ran that out. Now we ran it out, had a break of structure. Now look at how corrective this leg to the upside is. Very corrective leg, which just means that this is all going to be liquidity. Corrective legs end up being used as forms of liquidity. So we had this corrective leg in price, and then it impulsively gets taken out because that's, again, what happens with corrective price action. Corrective price action functions as targets. So this is corrective. Now here is an area of liquidity. Here's one, and here's another. And you can see when price gets to him, it attacks it, right? This was an impulsive breakthrough. Price gets to it here, impulsive breakthrough. And then here, it actually kind of wicked past it, but that tends to happen when you wick out highs and lows, or when you trade below or above a sensitive area in price. You'll usually get like a really quick move away. Like this was a low, a singular wick low, and then we trade past it and wick up. That's just typically what happens. Now here, that's the same kind of deal. It's a bit of a different case, but you can see what ended up happening is we ended up generating these relatively equal highs. So this would have just been enticing retail traders to sell, right? They're going to see a double top, whatever their patterns are. They see a double top and they sell that double top, and then they get taken out by this wick right here. So they get taken out by this wick. This wick barely took out the high of this candle here, and it also swept this intermediate high. So now our story, we see this, and this leg of price here was just a continuation from this leg of price as well, right? So you had this leg, pullback, and then an impulsive move to the downside, breaking this structure for continuations lower. Now we get our pullback right here, and then we get another continuation down, right? So this is the high that produced the new low, right? This high produced this low. Therefore, we are in this trading range here, right here. So we are in this trading range, and actually that perfectly touched the 78.6. I talk about the 78.6 all the time. For all the people who have been watching and listening to our YouTube videos for quite some time, you know that I preach the 78.6. It's by far the best fib level you can use, no doubt. So you can see this is our leg down. So this is our range from here to here. So until we break above this, we are bearish. And once we get a break below this, that's our new leg to the downside. So you can see we actually got our break below this with this candle here. So that means the new impulsive leg to the downside would be from this high to the newly formed low. So following that, we'll adjust our fib, see what happens. This is going to be a much deeper pullback. This is like a almost 100% pullback. So you can see this is the pullback here. Now there's no guaranteeing that we make a new low. That's just what we anticipate. It's actually kind of funny looking at this. You can see that this broadening wedge actually kind of worked, which is really weird. Usually they don't. But anyway, that's just a side note. That's total retail right there. So you can see that we had this leg. Now, where would I be looking for potential sells? Well, I would look here because this is the leg. And honestly, nowhere else except for all the way up here, because there's nothing. This took out these highs. So we took out these relatively equal highs right here, right? This is just an area of liquidity. So these equal highs right here, we took them out and we pushed below. Now you'd expect price to trade back into here and then push down, which it actually did. You could have used this wick as a POI. You can see we had a nice impulsive reaction off of that because this is the wick that actually took the highs out and created the break of structure within this intermediate leg. So here's our complete leg to the downside. Within that, we had a low, high, low, high. Low, high, low, high, low, high, low. So this high right here produced the low here. So this is a BOS, right? I'm sure you guys have no problem seeing that. I just tripped over my words for a second. So you can see this is like the last structural high. If we were to mark off how the structure would look, it would be low, high, low, high, low. And notice how this never closed above the wick. That's my rule for looking at structure. It needs to close above or below a wick in order to be a legitimate BOS. So this high right here didn't close above and it produced this new low right here. So this is our impulsive leg to the downside there, right? So if we continue, right, price clearly rejected off this. And then this was a completely legitimate entry. That there would have been an intermediate break of structure down here as well. So right here, this is a small swing low. This would have been your BOS, right? You could have looked for a reentry, but this was a good area to just take a short off of, especially after this candle. That was a nice move to the downside. But what actually ended up happening is it held the demand to push higher. And what it actually ended up pushing into was the candle that we were talking about earlier, the candle that mitigated this wick here, right? So we had a impulsive leg, pullback, impulsive leg. This caused the new leg to be formed. Think of everything as a cause and effect relationship. This high caused this low. Here is the liquidity it took out. This is its mitigation here. This mitigation created this new low. Truly, this is what gave it the fuel. This buy to sell right here gave us fuel to actually push below. But looking at the origin of the entire leg to the downside, this is the entire leg, and the origin is this candle here because it mitigated a previous buy to sell over here, right? It mitigated that and swept this high here and these relatively equal highs, right? So now we'll mark that off and then look at what price trades into right here. So price trades into that, and what happens again? It's like just the same story over and over. If I go here, you guys can see, put it right there, took it out by like 8 pips, which on the weekly time frame is absolutely nothing. So it barely wicked out that high. Oops, barely wicked out that high. And then we got a break of structure here. I actually talked about GU going short a while ago, just based off of this, because this is an intermediate or lower time frame low that produced the high, right? So this low produced the high. Now, where do we get a break below? So this is a break of structure here. BOS, where do we get the actual break? We get that break here, right? And then we get a pullback, leg to the downside, pullback, leg to the downside. So now that's not necessarily the weekly structure, but that is the intermediate, like daily structure, right? Now, from a weekly perspective, this thing could honestly short all the way off. We could be in for a lot more downside on this because based off of what we see here, it's a high, low, high, low, high, low, high, potentially lower low. Now, getting that move to the downside is going to take a really long time. Like these movements in price, you can see this was from February of 2018 to April of 2020. That's over 2 years, right? So this leg could take years to form, but it is a realistic expectation. We could realistically see a lower low on the weekly time frame, which means GU is just going to keep shorting off, but it's not going to move in a straight line. I'd prefer it to actually go well above these highs because these are just, this is an area of liquidity, right? People are selling these highs, right? They're selling the trend line here. This is a retail trend line, and we know that retail trend lines and retail methods are just areas of liquidity in the market. So I would expect price to trade above. Now, if it doesn't trade above, it's likely going to trade into this doji candle. This is the origin of this leg to the downside here that created the lower low. So we have this leg to the downside, 78.6 lines up, and our break of structure actually occurred right here. So BOS occurring at this level here because that's where we close below, right? Close below it right here. This is a BOS. We could or should push lower. And you can see on the daily, it's pretty apparent that it's just a low, high, lower low. This is the leg, pullback, lower high, lower low. Expect a lower high in here. Now, what could happen is we could run these highs, right? It's either going to respect at the 78.6 at 1.3700, right? That's a nice round level, 1.3700, 78.6 fib. That's lining up. That's an area of confluence. And I'm sure there's probably an EMA resting in there. 200 EMA right up there, right? So we could definitely see a push up into there and then a short off, or we could run these out because this is almost a perfect trend line. If you were a retail trader and drew this up like that, you would have gotten triggered into the trade. You would have made money, right? That's a perfect trend line. So that's an area of liquidity that can be attacked. And if you go to the weekly, what could end up happening is this could just be one big leg to the downside. I'm not going to use a fib really, but this could be a leg to the downside. And then this is liquidity. Now we know based off what I just said that this swept the high here. So this is unmitigated. It's unmitigated because you need to trade back into it after the break of structure. So after this BOS, when you mitigate, that's when, or when you return to it after the break of structure, that's when it's truly mitigated. That's the best way to put that. And then these highs would just be areas of liquidity. And there's also imbalance here that needs to be filled. So this is not filled. They're relatively equal highs here. So what you could see on the weekly is a push up like this. You could see a move up, a really impulsive wick that doesn't actually close. It could just even wick above that, right? And it still wouldn't be a break of structure on the intermediate or smaller time frames. And then you could just end up shorting off. So I personally think GU is going to go down just based off higher time frame analysis. I don't do the cycles or whatever. This is what I do. I just go to the higher time frames, look at the structure, look at the areas of mitigation, and then just play off those. And you can see right now we're following a really nice series of mitigations starting here, going to here, going to here, and now potentially here. And you can see that the mitigation where it starts, actually this was a sell to buy that caused a break of structure here. So this candle was what made this fail. This is supply that made this demand fail. So we need to trade up into that and then go down, and that's exactly what happened. So GU long term should go short. It also looks like it was a tap of a trend line, which is kind of crazy, to be honest. Right here. Yeah, it was. That's funny. But anyway, yeah, that's just my higher time frame perspective. Not going into cycles and stuff. I don't really do that, but I just look at structure, and you can see retail is probably going to get a reaction off of this level because that's what happens. We're just gonna, you can see it's reacting off of it right now, but I wouldn't trust it. I favor shorts, and I think that that's what's going to end up happening. And again, this is a corrective leg to the upside. So you can see like corrective legs are usually, you can usually draw them in like some type of channel. Like this was a channel right here. So as a corrective channel to the upside, and then it broke. And now we should get a push to the downside with these functioning as areas of liquidity here, because these were the intermediate lows that produce the higher prices, right? They're just like bases that produce the higher highs. So yeah, that's really my perspective on GU. That's just kind of how I'm looking at everything. And not going into cycles. Again, I've said it for the third time, but I know someone would be like, why didn't you cover that? You said you would, because that's not what I use. I'm assuming cycles are just like looking at the higher time frame structure and figuring out where you're at in the broader perspective. So yeah. Other than covering that, I don't think anybody else had any questions from last time. But if you guys do have questions, you can go ahead and ask me them now. You can see how when I was talking earlier about liquidity, like you see the singular wick low. Actually, I can't tell if we traded below that. No, we did not. So we must have mitigated something right in this wick. It's actually crazy. If you don't even need to go to the lower time frames, you can just look at it like this, but it really takes an eye. So I'm just going to start talking about random stuff that I think is interesting. If you guys have questions, go ahead. So we had relatively equal lows right here on the weekly time frame. Relatively equal lows wicked out, and this candle, this wick caused a move to the upside, a very impulsive move to the upside. And you can see we're going to mark off the wick that took out the lows. Okay. And look at what we trade into. It's pretty crazy. And if you wanted to, you could have refined your entry to the 50% of that. You'd be a madman, but you could. And let's say this is all just hindsight. I'm not saying we took these trades, by the way. So here is a high. This candle took out that high and caused the push lower here. So you could take it up into here. it's going to be a huge RR because it is the weekly time frame. So 50% is like right there. Put it right below 1 to 28 based off of the weekly. I'm sure it looks even crazier on the hourly because it would just be calling a bottom. Yeah, pretty crazy. But now at this point, we've broken the structure here. So it is going, it should be going long. And you can see like this is a really nice leg to the downside here that has a lot of liquidity resting in it. This is the origin of that leg right here. You can see it right here. It looks like it left equal highs, which is kind of weird, but we had a singular wick high that got taken out with this buy up to sell off. This is kind of already mitigated right here, but not really. Yeah, let's go. Let's look at the 1 minute so we can see what it would look like. It's gonna make it move around. Let's see if I can do this. I cannot. There we go. If it'll let me go back all the way, it probably won't. 5 minute. Yeah, there you go. So if you wanted to, you could have confirmed the entry and got more. Honestly, like right. For me, it would have needed to break this here, but you can see after it breaks it, could have caught an entry off of this, sell the buy, could have caught an entry off this. Now, this would be madness. But if you really were that crazy about doing your top down, right? If you were that crazy about doing top down, you could have entered right there, put your stop right there, and this trade would be a huge. This would be an astronomical RR, 1 to 187. I couldn't even hold something for that long, to be honest with you. But again, all hindsight. And if you want to like pick everything out and be perfect, you could. Because here, this, if you had the seconds time frame, this would be a break of structure here. So you could have entered off that. You would have been triggered right here. Could have entered right there. Also, could have entered off this because this is starting to make bullish structure. If you look at that, is this, if you look at this as BOS, it's low, high, right? So this would be another POI. So if you were to get it like all in with these trades, you would be up an insane amount of RR. We just take these, I'll scrunch it and drag all of them up so we can see how mad this would be. This is just taking it into that weekly level I pointed out. So what is that RR? 1 to 125. This one won't be as big, but it'll still be pretty big. 1 to 75. It was calling a bottom based off of the weekly time frame. Not a fan of doing that because that's really particular analysis, but you could have, and it would have been legit. Again, all hindsight. I'm not saying we took these trades. That's not what I'm not trying to convince you guys that we did. Just saying you could. If you get that good at understanding price action, which people have done, people are that good. There are a lot of people who are that good. But yeah, it's pretty crazy. And I don't even know if that's into the weekly level. I think that's like right below the weekly level. Yeah, it's not even up to the weekly level. So if we go in, we'll go back in and adjust it again. You can see like understanding the higher time frames is powerful. That's what this is showing. Like if you understand the higher time frames and then understand how to scale in at those higher time frame levels, you can make a lot of money because it's just it's an increased risk to reward ratio. So that increases this to a I don't know. It's probably going to be in the 200s. 1 to 206, 1 to 83, 1 to 138. That's like over 400 RR. I take trades. Yeah, like taking trades off of the 1 minute is good. It increases your risk to reward a ton as compared to just like taking it off the 30-minute or whatever, which we did with EU like the other day. I mean, it's just an easy swing trade idea, or we weren't shooting for high RR, but taking trades off of the 1 minute, it works. Like if you get it down, yeah, it is powerful because you can increase your risk to reward by more than tenfold. Yeah, like taking trades on the 1 minute with referencing the weekly is hard. That's what I'm saying. Like it is really difficult. Yeah, Dre's saying he does it on the 1 minute because banks can't really manipulate. Yeah, it's very hard for them to manipulate those because like the higher time frames move price, but looking at like if you think about it, the 1 minute chart is what actually moves price. Like the smallest time frames move the biggest time frames. And I remember like when I first started, I would always get confused because they'd say the higher time frames move price. And I was like, how if the lower time frames make up the higher time frames? Like that doesn't make any sense. But the idea is the technicals and the concepts on the higher time frames will move or guide price in a direction, but the 1 minute makes up how that price is actually forming. So like if you have a sell to buy on the 4 hour, that's going to have more validation or validity than a sell to buy on the 1 hour. But the 1 hour chart will kind of form the 4 hour look. It's hard to explain it, but I'm sure you guys know what I'm saying. It was just confusing to think about when I first started. And honestly, it's still like I understand it now, but I can't explain it. It's just a weird concept. But yeah, so what else is there to talk about? Because if you guys have questions, go ahead, but no one's typed anything yet. Reaccumulation on EU. I talked about it here. I can't remember if this had already happened when I uploaded the video. No, it didn't. I was talking about how this was reaccumulation, and you can see it's just like really, really clear manipulation right here. It was 1 tap, 2 tap, 3 tap, 4 tap, 5 taps of that trend line, right? So we were generating this trend line for retail traders to play off of, right? That we got so many retail traders enticed with this. And then look at what happens. Just boom, manipulation, right? Take it out. So this wick took this wick out. This wick took this wick out. So we ran out this low. I mean, these lows had all successively been run out, but this is just reaccumulation, taking out this low and this low. And this had a lot of liquidity below it because it's just one really big wick, right? We do that, get a break of structure, then we trade into it and push back up. We're just retesting the quote unquote spring or the run on the channel, because reaccumulation forms a channel. You call this the creek. So you had this creek here in price, and I'm not making that up. It looks like a random drawing, but that's actually what it is. So we had this creek, we jump it, we return, and then we start pushing up, right? So here you can see we're respecting demand the whole way up. We had this area of demand right here. We respected that. This area of demand respected here. Push up, and then it failed. We start respecting supply, which if you want to think of structure in terms of supply and demand, you can. Supply is in control means we're bearish. So supply, supply, supply. You can see that here. I don't know why I drew those so far, but you can see supply is being respected on the way down. right here. And then we trade through it. But this is a ranging market. I'm kind of avoiding EU, to be honest. Like, this is just ugly. But you can see retail got a nice little break and retest right there. Kind of gave that one to him, to be honest. But yeah, yeah, there's nothing wrong with trading it right now. I'm personally not. Have you done any kind of personally, no, I haven't. We do have a spreadsheet of it though that we can, or that I can send you if you want to message us. Um, I I don't look at it because I take more trades than what we send out. So that's kind of on me for not keeping a strict journal for just the signals, but I have, like, I do my own 15-minute footprint 1 minute. Yeah, like trading, I personally trade when I trade, which I haven't been doing a whole lot because I just graduated and the markets have been crazy. But when I trade, like, yeah, I prefer getting, I get my directional bias from like the daily and the 4 hour. And then after I do that, I'll drop down to the 15-minute, even the 5 minute, and then just get my entries on the 1 minute. Like, that's my favorite way of trading. And that's how I traded most of the summer. It was great. Like, summer trading, I was in Florida on vacation. I did like 18%. And I would just go to the coffee shop and watch the sunrise and trade. But that's another story that's not that important right now. Anyway, so yeah, like, get your bias, but then play the lower time frames, because I don't like holding in forex. There's too much that can happen, to be honest with you. I'm not a huge fan of holding, like, I'm not a swing trader at all, which is why I said I didn't know if I could hold that AU trade. That would be too much for me. I can't do that personally. And even, like, you don't need to swing trade to get like high RR trade, and you don't need pips either. Pips don't matter. Like, you can count pips all day long, but it doesn't matter how many pips you catch. It has nothing to do. Yeah, TP1 hits and TP2 hits. So when we start back up here soon, we are going to have a legitimate journal where we track everything, because we didn't start one at the beginning of the year just out of poor judgment on our end. We did track our trades, but we're going to have a legitimate journal and a spreadsheet that will track everything. And we're actually going to have someone else helping us, which will be really good. Just the more people, the better. So we're really, really excited about that. But what's another good topic to talk about? Oh yeah. So this is just like a little note. So in the olden days, back when your parents were trading, you used to be able to place orders at candles like this and just put your stop below without having to really confirm the entry. Like, you could just place a trade and follow the cookie cutter blueprint of putting your stop below the sell to buy candle or the buy to sell, depending on which direction. Now, you can't really do that anymore, because this is what happens. Price will wick it out and then respect. That's been doing that with structure too. You'll have a structural level and price will trade back down, right? Wick it. So wick it, not close below, and then go back up. So confirm your entries. A lot of people have stopped doing that, like, not you guys in particular. I'm just saying, like, in general, people aren't confirming their entries, and this is what happens all the time. It's almost without failure. Yeah, it probably is because of the time of year. It's just it started happening like really a couple months ago. the markets just became very erratic, which isn't surprising with everything that's happening. But confirm your entries and be careful with them, because price, I can't tell you how many times I've seen price do this lately, where it'll just wick out a POI and then do exactly what I think it, is gonna do. It's really annoying and it's not fun to watch. So confirm your entries, be smart about it. It's really important to do. Um, that's just like a piece of advice that I think will save a lot of people's stop losses, to be honest. Yeah, it happened to us a ton. It happened to us a lot. My favorite pair is probably GU. Yeah, the last 2 months it happened nonstop. But the unfortunate thing with signals is like we can't wait for like, because what I'll do is if I see this getting wicked out, I'll wait for like a break of structure on the lower time frames here, because there wasn't really a whole lot resting above the POI in terms of liquidity. So that's why it got taken out. So I would wait for a run and then a break of structure to confirm my entry long, and then play these mitigations. So like there were mitigations likely within this leg of price action here, right here. So this leg had many mitigations, MINI, not many, like a lot, many mitigations like this that you could capitalize off of just playing it up. But sending signals that you can't just like, I can't just be like, hey, I'm getting in with a 2 pip stop. It so many people would. It's a way. Yeah, wait for the BOS on the lower time frames. That's why it's important to trade on your own too and understand it. Because a lot of people, and like even with signals, these levels will get wicked out and it really sucks. But if you understand price action and how to trade it, just wait for it to get wicked out, because you understand there's not a lot of liquidity, and then you just play the mitigations. Dre, you can, I think I can unmute you, or you can unmute yourself and ask a question if you have a question. Yeah, fib liquidity too, like people trying to sell off the 50% or 61.8, they usually get taken out for the 78.6, which is why the 78.6 works so well. You have a question? Let's see. Yeah, 79, same thing, 78.6, 79. It's really, there's not like, it's not a significant difference. Like you could, people use the 62 instead of the 61.8. It's basically the same. What time is it? Oh, it is already 8:43. Okay, we'll go for about 5 more minutes. No, I couldn't hear you, bro. If you want to type it, you can type it, and then I'll look when you're done writing it, and I'll just keep talking for a minute. Yeah, so EU is just crazy, man. It's so hard to predict. Look at that. Beautiful. That is beautiful price action. Let's draw a little wedge here. Sell it off the trend line. Look at that. I'm just being stupid. You guys know that. Yeah. Granted, this is Asian session, but it's still just funny because it looks so bad. Yeah, let's trade it. Let's put a full margin Lambo lot on it. Play the breakout. But I guess just to like wrap it up, well, I'll talk about some stocks real quick. Stocks are actually very easy to do technical analysis on. I've been doing a ton of technical analysis on stocks, and I've been enjoying myself because it's pretty fun. I can't lie. They just tend to respect a lot, and it's relatively easy to pick up on, just like wedges and the triangles, and it's pretty crazy. I bought Nvidia all the way down here because of this trend line, and it ended up running all the way up, and you can see it respects support and resistance very well. Apple, same thing. I bought it at the breakout of this wedge and it retested right here. And then it's just been pushing up, broke a bunch of support and resistance levels, broke this one. It's getting a nice push up. GameStop broke out of a trend line. I tried to draw it in like segments so I could make sure it is connected here, but that looked really awful. You can see breakout here, retest, break and retest, test of the 78.6. Snap was insane. I bought it all the way down here because of this trend line here. This is just all my own analysis. Like quadruple bottom, push up. I wanted it to break this. It broke out, retested. And then you can see it broke out of this. Should retest. This broke out of a trend line here. When I was looking at it today, I didn't take a sell, but said if we break this support here, I'll short it. If not, play the breakout, and ended up breaking out. Yeah, like indices and stocks, there really isn't any, there's like no manipulation. Like it follows technicals really well. They both follow technicals really well. Had this one too. Break out of this level, broke out, retested here, mooned all day. SPY, easy trend line. One tap, two taps, three taps, fourth tap, all the way back up. Boeing was easy. Broke out of the trend line here. 1, 2, broke out of this support and resistance level. Held it to up. I held it all the way up to here. It actually broke out of this level too. Retested it with that candle and pushed up. So it's pretty interesting to see. It's pretty fun, but I'm only bringing it up because we are doing that partnership and it's going to be a lot of fun. So that's really all I got. I'm going to stop the recording here and we'll just kind of start wrapping it up.